the Dubai Business Women Council. We've got a lot of material to get through in the next hour, and that's going to be presented by a range of speakers, starting with myself. I'm going to talk about cash. Then we're going to move on to Peter Whatley, Pete Mahon, and Bill Anderson, and I will let each of them in their own right introduce the topics that they are to speak about. GTAG as a company is a provider of various financial and accounting services, from ongoing monthly accounting, systems build in terms of an accounting package, VAT, fractional CFO or finance directorship type services, purchase and sale of business, valuations, etc. So let's get into this. There's things we only tend to remember when crises hit, and we're in one. Let's just be honest about that. We remember that cash is king, and it's not that in a crisis cash is king. Cash is always king. It's just that in the good times we tend to forget about it because there tends to be more king about. In the current environment, we seem to be less concerned about turnover, we're less concerned about profitability, we're much more concerned about cash. And I want to get into cash, because if you are managing your cash, a lot of the other things follow. So, but what does that mean? We've all got our own views on what managing cash is. And I'll tell you what managing cash isn't. It's looking at your bank account. Your bank account is a picture at a point in time. It doesn't give you an idea of what it is you should be thinking about going into the future. And on top of that, because it doesn't structure in a useful way what has happened in the past, it's not that good for you. All it is telling you at a point in time, on a day, how you are feeling. And you know, thinking about yourself as an individual, as a human being, that's an accumulation of things over time. I should point out that if you do want to ask any questions, on the right hand side of the screen, there is somewhere you can type questions. There's a little button, which is like a little text box, which is sitting on top of another text box, and I believe one of them has a question mark on it. Type your questions in there and we will deal with those towards the end of this presentation. So when we talk about looking into the future, because that's important, remember it's forecast. Where do I think roughly it's going to be? Well, how far out do you go? Well, you don't go out that far. You don't need to. There is a reasonable amount of time that you can look forward, and there is a reasonable amount of time which you're capable of looking forward in a useful manner. Very often we think that these are a lot like budgets, so it should be a year, 2 years, and anything but that. You can certainly do that at a high level, but in terms of managing things on an ongoing basis, it is certainly not the way to do it. Before we get into that, I want to address one more thing, and that's the power of money. Money gives you power in that it gives you the ability to exercise options. And in a time like now when money is short, you've actually got additional power. You've got the ability to look across the marketplace. You've got the ability to do deals on a purchasing side if you're able to pay up, where you're confident you're going to receive monies on the other side, to be able to negotiate better terms. You might be thinking about an acquisition. In the current market, prices are depressed. That's just where we are. So you do have, if you are one of these people who has money's lying around, you have that ability to get a jump start ahead of when the market turns. And be absolutely clear about this, the market will turn. And I'll give you one more thought before I move forward on that. In normal times, 9.5 out of every 10 people are working. Think about 4 or 5% unemployment. In really, really bad times, 1929 style, it's about 7.5 to 8 out of every 10 people are working. That means there are still people working and there is still an economy. That's important. Okay, keep that one in mind. So when we get into talking about forecasting, there's a certain amount of fear. I mean, how damn difficult is it? You're feeling that type of color. You're feeling green. You're going, I have no idea what I'm doing. I mean, how difficult is this? And it isn't. So what I'm going to do for the rest of this, my part of this presentation is I'm going to show you very simply how to do a cash flow forecast for your business, and also talk about the amount of time that you should be looking forward. And it would look something like this: 13 weeks, 3 months. That's about as far as you can look forward with any degree of accuracy. And this might look complex right now, but I'm going to walk you through step by step how this populates. What's on the verticals, and then and the horizontal, and where the numbers come from. And hopefully in the next couple of minutes, you're going to be able to walk away and go, actually, that isn't that bad. I can do this. So what are the building blocks? First things first, on the horizontal, you want to look forward 13 weeks. Now, you might spot there's a couple of letters up there, S's and a V. Well, you pay your salaries typically monthly. So you know in a given week that salary is going to go out. And you know once a quarter, if you're VAT registered, you're going to have to pay VAT. Okay, that's your horizontal done. And that's it. It never gets more complicated than that. On the vertical, we go, well, money is in, our revenues, what our clients are giving us. And there's key elements there. There's particular clients where you're going, that one's more important than another. So you identify those particular ones. You can use Excel notes to make little notes about what it is. Then you've got your costs. You know what your salaries are. They're pretty much the same every quarter, allowing for expenses and maybe commissions. And they just slot in. That's 3 numbers. Your rent, depending on what your deal is, it could be monthly or quarterly checks. You know when they're going to fall. Your VAT, that's once a quarter. You know what that is. After that, you've got some key suppliers, and then a little bit for after. You know what your opening bank balance is. You know what that is. Put that in here at the start. And then what you have, quite simply, is how much money I'm expecting, how much money I'm going to have to pay out, allowing for the difference between the two, and allowing for the fact that you mightn't have a bank overdraft facility. The numbers here must always stay positive. Okay? So we put in our opening bank balance. As we see, it runs all the way across. We then go, well, what revenues are we expecting? Put in the numbers. And by the way, this is a forecast. It doesn't have to be right. And by the way, it isn't going to be right, but that's not the point. The point is it gives you a focus, which you know you're going to have to look at this every week, do this at the start of the week. You're going to know which clients you should be speaking to, which ones you should be chasing. And from a supplier point of view, well, who am I going to be paying? Here, I've got my salaries. And these are just indicative numbers. And we can see then that I can manage my cash flow across a period. We know where the risky ones are. So this looks all good in itself, but this is an ongoing exercise. And we come really to the last piece. So what you then do is you go, well, after a week is finished, you go back and go, well, what happened? So let's say we got monies from this person and we paid that person. Okay, that gives us a new bank position. And it tells us what happened. We then look at the rest of the numbers that we had forecast and we go, what's changed? Maybe I know this customer is going to pay on a little earlier or a little later. Then you adjust it. Now the same goes off your suppliers, because if you don't have the cash, you can't pay them. But at least now you know what is likely to happen. And the final thing you do is you add a new week 13. And then you do this every week. And what you're going to be able to do over a period of time is you're going to be able to go back and look at what it is you, how much better your forecasting is becoming. And it really is that simple. Okay, next up, I believe, is Mr. Peter Whatley.
Good morning, everybody, and welcome and thanks very much for having us here. What we're going to have a quick chat about this morning is VAT penalties and how it's likely to pan out post-COVID-19. All right, so my name is Peter Whatley, and to put it, just to see where I fit into all of this, I'm a former tax inspector and former tax and audit partner with Grant Thornton, and one of the founding partners of GTAG. So what can we actually expect during this time post-COVID-19? So the first thing that will happen is we're expecting to see an increased enforcement we're looking to see increased enforcement activities by the FTA, stricter interpretation and applications of the law. At the moment, if it's a bit tight, there's a little bit of a grey area. There's a little bit of flexibility when dealing with the FTA. The next thing we're likely to see is the stricter imposition of penalties. I think David was hinting at cash flow earlier, and just like any business, the country itself is also an economy. It also has to live by cash flow. It can't just dish out money. So penalties, VAT are all part and parcel of the revenues of the country. Because things are tighter, we also expect that there will be less leniency if penalties have been imposed, either with the amount of penalties that have been imposed or the willingness to reduce penalties in the event of someone actually querying or asking for a reduction in their penalties. So when we talk about penalties, where are we? What offences carry the penalties? So to understand the penalty side, effectively we're dealing with two types of penalties: administrative penalties and judicial penalties. So what is the difference? The one is typically imposed by the Federal Tax Authority, and the other one is typically imposed by the courts. So David tends to like referring to the FTA and the RTA in his discussion. And he usually raises the issue that the list of penalties that apply to the FTA are equally as long as those that belong to the RTA. The only difference is the number of zeros that follow the initial numbers. So he's quite right. There's a really, really long list of penalties, and what we'd like to highlight is the most common ones that us as businesses are likely to encounter. And the first one is lack of proper accounting records. So these penalties are quite steep. If you don't keep proper records, and Excel and the like are not proper records as far as the FTA is concerned. The first offense is 10,000 dirhams. If you fail to do that, 50,000. The second one is an administrative penalty. This is typically equivalent to an interest charge that gets raised on outstanding taxes. And to put it in perspective, it tends to run at around about 1% a day on average. So it's really significant and can sneak up on you, and it's big. Then there's the not displaying of prices inclusive of VAT. This comes with quite a hefty price, 15,000 dirhams. But we need to remember that this doesn't only apply to the likes of going into a Carrefour or a Spinneys. If you've got a menu that you're ordering and you've got food on your menu, you're running a restaurant. If you've got online pricing, you've got an online site and you're listing your prices, these prices must be inclusive of VAT. So, and this is an area where the FTA have been going out into businesses to have a look at it. The most common one that we tend to find is late submission of VAT returns. You don't get it in on time, 1,000 dirham penalty first up. Thereafter, every time you fail to submit on time, 2,000 dirhams. When you make a mistake, a significant mistake, and you issue an incorrect VAT return, you sit on penalties that are actually quite significant. 3,000 dirhams first offense and 5,000 on a second offense. Now, that amounts up as well. So if you've made a major mistake and you have to go and rectify a past VAT return, the first thing that happens is you're going to be penalized with either one of those two penalties. So the trick is get it right the first time as best you can. And the last of the major ones where people tend to fall foul of the legislation is failing to issue a correct tax invoice within the prescribed period of time. And that comes with a penalty of 5,000 dirhams per incident. So if you're running 1,000 invoices a month and you get it wrong, you're on for potentially quite a significant penalty from the FTA. When it comes to judicial penalties, these are brought in by the courts. They're punitive. It's up to 500% of the VAT due and jail time. So this one is not to be messed around with at all. So what are your options if you end up getting penalized? Well, if it's an administrative penalty, these are your typical options. Accept the penalties and pay. Submit a reconsideration request. So this is where that penalty's been imposed and you write back to the FTA, albeit it must be in Arabic in a specific format, and you ask them to please reconsider that imposition of penalties. But if you decide to go down this route, what is important is to monitor communications from the FTA and the number of days that have elapsed since you did the submission. This is one of those weird positions that if you don't hear from the FTA within the period of time, it is within the period of time that they need to come back to you, it's deemed that they have disallowed your application. So it's important to monitor the length of time it takes from your initial submission, and if they haven't had a reply, to follow up immediately, because there is an escalation process that allows you to move forward, go beyond the initial FTA tax inspectors who've imposed the penalties, and it gets kicked up the line to a higher authority. If, however, you end up with a judicial penalty, there's only one thing to do. You need to appoint legal counsel. This is serious. Yeah, jail time is not something to be scoffed at. Okay, so what happens if penalties are unavoidable? You know, you've come down, you've done your best, it's time to do your VAT return, and you haven't got the cash flow to make the payment. Whatever you do, submit the VAT return, because what this does, regardless of whether you have the cash to pay it, this prevents at least the 1,000 dirham penalty or the 2,000 dirham penalty that comes in for late payment or late submission. Thereafter, for late payment, the administrative penalties run, but at least you've avoided the late submission penalties. The second thing that you need to do, or a bit of advice, is when you pay the tax, if you've had penalties imposed, go onto the FTA site and flag it to pay taxes first and not penalties first. Because in most global jurisdictions, when you make a payment, they offset everything against your penalties and thereafter against the taxes. But if you pay the penalties first and you haven't settled your taxes, that 1% a day keeps on running. So it's important to stop that. And by paying the taxes, you stop the administrative penalty growing constantly, and then you can deal with the penalties and settlement of the penalties at a later stage. So the biggest takeaway that I think for all of us that we need to take into account is there's going to be increased VAT activity. There's going to be strict post-COVID-19 enforcement taking place. So it's important, I think, for everybody to make certain that their VAT affairs are in order in light of all of this. From ourselves, from David, myself, Bill, we are more than happy to have a quick chat to people, to just get a feel for how compliant or non-compliant they may or may not be, or they may already be in a position where the FTA has already imposed these penalties. And it might be worthwhile just having a little half hour telephone conversation just to get the lay of the land and then address a way going forward. All right, so from my side, that's my side finished. You'll see our contact details if you need to reach out to us at all. And I'd like to now hand over to my colleague, Pete Mahon.
Thank you all for joining us. I'm going to talk to you today about how to plug in a CRM or a customer relationship management system into your business to help with rebounding after COVID-19. Just to tell you a little bit about myself, my name is Pete Mahon, working alongside Gulf Tax Accounting Group in Business Improvement Group. We are helping businesses effectively to navigate the difficult waters of understanding what are the right systems, how can they be secure, how can they protect themselves, and all without the heavy costs that are usually associated with this kind of thing. So just the reason why winning CRM has made the list today is because the CRM is one of the most important parts of your business. The key element in rebounding after COVID-19 is increasing revenue or increasing sales. So maybe you already had an established growth plan in place before being hit with financial difficulties. So if so, you can use that as a starting point to brainstorm with your team and find some creative ways to move forward and be prepared when business does pick up. So where initially much of the concern was centered around employee health at the start of the crisis, now is the right time to make sure that your CRM, or if you haven't got one, to get one, and the other tools that you use are set up to keep an eye on your business health on a continual basis. We recently dealt with a business which suddenly had to switch overnight from a B2B or business to business model to a B2C model. So effectively switching from a trade to a retailer. So moving from being trading to retailing in terms of your sales process, it's a colossal shift. And without tools like a CRM in place, you're guaranteed to fail, or at least to have a massive administrative nightmare. So as we all get used to this new world, some things remain the same. Opportunities need to be pursued and sales need to happen. Customer service also needs to be prioritized. So in other words, sales, marketing, and customer service departments, even when they're working from home, need not only to be aligned, but perhaps more aligned than they ever have been. As we switched to working from home, as so many businesses did, many of our internal processes have changed and they're bound to continue changing. So this means that there's a high chance that valuable leads will fall through the cracks and they'll lead to missed opportunities. However, if you connect to a winning CRM system, your sales, marketing, service staff will avoid spending hours searching through emails and trying to connect with other co-workers to check the status of specific leads. If you have a winning CRM, it can be connected to your website forms, for example, to capture online inquiries directly into the system and route it to the right person for follow-up. In many cases now, this can be done using chatbots or even a live chat feature, all while capturing that valuable customer information automatically without taking up your staff's time. Now, we will touch on each of these elements as we go along today. I am conscious of time, so I'm going to get through it as quickly as I can. But your winning CRM can easily meet all of these requirements and much more besides. First and foremost, your winning CRM shouldn't be just mobile friendly. For your salespeople, it should be mobile centric. If a customer sends or receives an email, this should be captured instantly in your CRM. Your incoming and outgoing calls should have some brief notes attached and be automatically logged. So from a user experience or a customer service point of view for your customers, the worst feeling you can have is when we contact the business and we feel like they don't know us. And that's something that you should try to get away from. Make sure your customer feels like you know them well. This is core to improving your customer relationships and closing sales. But moreover, it helps if you need to downsize or grow your sales team and provide history to someone else who's taking over an account. Additionally, WhatsApp customer service is increasing, as I'm sure many of you have seen. These should also be treated as professional communications, and they should be captured in the same way for future reference. If your pipeline view as a manager is your main event or the big show, the activities are what happens backstage. The lights, the rehearsals, the direction. The success of your show lies in giving attention to the details of who is actively doing what behind the scenes. It's really key to log all these activities so you can see what's happening. A salesperson needs to have their entire week planned out before it starts. That's the ideal. So the CRM that they're using should be centered around activities allowing them to easily schedule and take notes on completed activities. Creating activities in a CRM ideally should automatically create events in either an Office 365 or a Google Calendar or whatever you're using on your mobile phone, so that they can further leverage a mobile experience. Things like the reminders or using SatNav to get to a client site. So while you might want to see an entire sales funnel and be thinking about it from the overall point of view, your salesperson just needs to know what do they have to do on a given day. That's it. At a glance, sales management needs to see what's outstanding, who's performing the best, who isn't contacting clients, or even worse, who's breaking process and thinks they're a maverick, because they're the type of people you don't need in your future business. So what is an activity? An activity is anything that moves a deal towards closing. It can be a phone call, a lunch, a meeting, an email, or anything in between. You can't control the outcome of deals. You can only control the actions that push deals to a close. So by recording all these activities means you can gain insight into how many activities it takes to close a deal. Now you can start managing your teams more efficiently, and you can start setting effective KPIs for your sales teams. So I'm sure you'll all agree, everyday sales admin chores, they can take up far too much of a salesperson's time. They should be out there selling. You should be able to automatically create a deal when a new contact is added to the CRM. One of the most expensive CRMs out there requires you to create an organization, followed by creating the person, followed by creating a deal. However, the winning CRM, and there are a few of these, will ask for all this information in one fell swoop, saving your sales team a lot of time and effort. So in some cases, you're talking about keying this information in a third of the time. Or perhaps you need to transfer ownership to another person when a deal reaches a new stage in your pipeline. For example, if a contract needs to be sent out or a proposal, or there's order fulfillment to send some goods, or accounts team needs to check for receipt of a payment. Ideally, you would be able to create activities every time a deal is moved further along your pipeline. This is essentially like a workflow automation, but it's key to making better multitasking and increasing the sales team's productivity, which means your salespeople have the ability to just keep selling. Now, I mentioned earlier that things like web forms and chatbots and live chat can be used for direct lead capture, but there are other ways of capturing or generating leads from platforms such as Google or Facebook, to name a few. Your CRM system should be geared up for this, so your marketing team aren't spending time downloading spreadsheets and re-uploading them into your CRM for your sales team. Once the orders are taken, invoices should be produced automatically. So this will introduce new controls. It reduces the margin for error in your accounts, and again means that your sales team are focused on the important bits for them. And if this is coupled with automation, you can have your invoice process happen seamlessly with no involvement from your sales or account teams. If your CRM is capturing all the required information you need to, for example, generate a proposal or a quotation, your salespeople should be able to generate the basic proposal with one click from your CRM, with all the information moving across to generate a proposal. And similarly, email accounts, calendars, contacts, they should be synchronized to your sales team's phones so that one, they have all the information on the move, and two, you can record everything they're doing relating to sales without having to enter the same data twice. Now, some CRM systems will take weeks to set up if you need lots of custom data fields or workflows. However, the setup of the right CRM for you can be done usually in just a couple of days if you know exactly what you need. It's also important to get the balance right between capturing sufficient data and not bombarding your sales team with a difficult data collection process. Now, there is a danger as well of getting stuck with the wrong system if you pick the wrong one, and you get pushed into accepting something which doesn't actually fit your desired sales process. So you need to select your system based on your business process and take some advice before making your decision. Now, the sales have completed, they reached the end of the pipeline, but why you won is in many cases actually more important than why you lost. These deal reports that you get from your system will show how many opportunities your salespeople have won or lost and why. You need to be able to get insights on the sales cycle duration and win rates, and that will help you improve your sales process and make it more efficient in future. If you have a revenue forecast, this will help to report or predict turnover and growth to help spot any problems before they arise. Recurring revenue reports will reflect customer payments that are coming in multiple installments, for example. So that will help you to accurately project revenue, going back to David's cash forecasting. If your CRM can't help you to predict your future income, it's not doing its job properly. Reporting on activities that have been done allows you to track sales activities like emails, demos, calls, events, etc. If you're focusing on the tasks that your team can control, that will allow you to watch the sales unfold and repeat patterns that have worked. If any of you are paying referral commission to partners, for example, you already know it's important to record and report where your leads are coming from. Your CRM, again, needs to give you the insight on exactly where your business leads are coming from and which ones are converting best to deals. Insight into where your leads come from allows you to decide which channels you should be investing your time into. So, for example, 150 leads from somebody who's taking a 10% commission, but where 5 of those leads actually close and become a sale, versus 10 leads from somebody else where 100% of them close and lead to a sale, it's fairly easy to see which one is the more important one. So that gives you the opportunity to decide where you should be investing your time and money, be it chatbots, web forms, paid advertising, or somewhere else. Now, if your CRM of your sales team are working off a spreadsheet today, frankly, someone else probably already has a copy of that data somewhere. So just let that sink in. These are your crown jewels. The winning CRM will allow you to keep your data safe, and it'll show people only what they need to do their job effectively. Nobody except the data owner, which in many cases might be you, should be able to view all the data at once or export it elsewhere. So this is the really key thing. If the system's set up properly, you don't need to export the data. Lock it up, make sure nobody else can get this. So for example, if your accounts team need access to information to confirm payment, which we mentioned earlier, you can have the system automatically and temporarily allow the accounts team access to the data in your CRM just long enough to confirm that a payment has been received. So this is in effect segregating the duties of people. Now, finally, another way to protect your business is to ensure that your customer data is protected in line with a growing number of global data protection requirements. We've recently seen the introduction of UAE's first comprehensive data protection law in DIFC, and I'm expecting more to come in the very near future. If your sales team or anyone else in your business is able to walk away with your data and the personal details of all those customers or leads, you're not providing due care for personal data, and you could be fined in times to come. So that's it. I tried to get as much in as I can. If any of you have any questions, please feel free to post them. I'll be happy to deal with them as required. I believe Bill Anderson is up next. Bill, over to you.
Good morning, everybody. I'd like to say hello to all our friends at the Dubai Business Women's Council. I'm going to be talking this morning about setting up an e-commerce business. And as this council is a women in business council and women entrepreneurs, I think it's going to be very relevant to many of the members. I know there are quite a few other people also tuning in. Obviously, we're going through challenging times. So my presentation, and I'll get into who its audience is for, but it's primarily for 2 audiences. The first audience will be for existing businesses, what I call traditional brick and mortar businesses, who need to start moving into the new world of e-commerce, and many companies are starting that process now. Some of them have been doing it under duress for the last few months and learning a lot of new lessons. But the second audience that I'm aiming this piece onto are for people who have lost jobs or who are in the process of losing jobs, or for people who are not happy in their job and they're thinking about alternatives to the usual 9 to 5. So I'll get into that. Just a little bit of background about me. I'm a partner in Gulf Tax Accounting Group. I'm also a partner in Business Improvement Group with Pete. And I sit as an advisor in a number of other companies, a family office. I was a CFO back in the old world of banking back in the UK. But I went through a very interesting transition myself when I left banking as an employee and set up my own wealth practice in 2006. Back in my home country of Ireland. So I went through the process of converting from being a corporate employee to running my own business. And it's a huge transition. I thought I knew it all, having spent 15 plus years in the corporate world at senior levels, but I learned more in my first year running my own business than I did in the previous 15. So now I work with a lot of companies, whether they're startups or technology companies or family businesses. We work with those companies, particularly in the region, and it's a great place for businesses to kickstart. So as I mentioned, the two audiences today, people already in business but needing to move more into the 21st century, and obviously people who are thinking about setting up their own business. And there's a lot of people out there who have just gone through the process, and again, I think this is a great opportunity, if you have lost your job, to really think about what you want to do next. And for those of you who, feel that you have what it takes or you're not sure about it, then this hopefully will be an initial step into it. So I'll crack on if you don't mind. So for me, the most important first step in setting up an e-commerce business or any business, is putting together your business plan. And this doesn't, this is something that all large businesses should do. They don't necessarily do it. And it's definitely something every entrepreneur should do. I get a lot of people who develop their marketing plans and they get their licenses and they have their financial numbers, but they actually don't have a plan. They don't have an all-rounded business plan. And without getting too much into the detail of what is in a business plan, I really want to just stress to people why it's important to have that business plan. If I meet a person who comes to me to help them work with their business or help raise funding from investors, the very first thing any decent investor will ask you is, show me your business plan. And if you haven't spent the time putting that down on paper, then in your head isn't good enough. It just shows a lack of professionalism. So you might have some fantastic ideas, and I meet lots and lots of people, and I have done over the last few years, who've had some great ideas, but they didn't take the next step and commit and put it down on paper. So a little bit like what David was talking about with writing down your cash flow projection tool for the 13 weeks. It's a far easier thing and a far more likely tool to help your business survive the current challenges than if you were totting those numbers up in your head or scribbling on the back of a bit of paper. So it helps you make better decisions, and it also forces you to ask the right questions. So the last thing you want is for something to come up that you haven't thought about and you're already kicked off in your business. And as a very good example of that, I met a lady last week who had just actually set up her business license and was now coming to have a chat to us about how we could help her put her business plan together, her accounts, her taxation, and her strategy. And it was a bit frustrating because immediately, having sat with her, it became very obvious that she had set up her business in the wrong zone. And that meant, from a future point of view, at this particular point in time, it wasn't a huge issue, but for someone who's building a brand, that had severe implications. So now she's actually going about the process of setting up a new trade license, and she's lost quite a chunk of money. So it's really important to avoid the big mistakes. And whether you're an existing business or whether you're a new entrepreneur, you do not have the time or the money to waste making mistakes. Another thing I talked to a lot of entrepreneurs about is passion versus profits. At the end of the day, you have to have a passion if you want to drive your business forward. It takes you through the tough times. It comes across very quickly to other clients and investors, but you have to very much focus on your profits as well. Running a business and passion alone isn't good. It's not going to be a long-term success. Now, you don't want a bean counter running your business either. So this is why it's really important to partner up with the right people. Whether or not you have an actual equity shareholder who's a partner in your business, or whether you have partners that outsource different parts of your business, that's really key. We've done separate presentations before on setting up winning advisory boards, and I think this is something that a lot of entrepreneurs should explore. Really key, setting goals and targets. And ultimately, if you put a lot of this stuff together properly in the right format with the right questions, and you've highlighted what the opportunity is, it really does help you secure funding. And ultimately, until you put your numbers together, you're not really going to know how much funding you need. And this becomes a big challenge for a lot of companies. At the moment, a lot of companies are sitting down looking at what their costs are, what their monthly burn rate is, and what's the money coming in to pay those bills off. Hence, a lot of companies are cutting HR and human staffing levels, because that's one of the quickest areas that they can reduce costs. So funding at the moment is absolutely vital. However, the downside of getting too much funding, and that is a problem, is people end up taking over your company. So you need to be careful. Obviously, as part of your business plan, you really do need to research the market, what's the product, etc., and the competition that you're going to be up against. By doing all this through your business plan, it's going to really help reduce risk in your business. So as I said, I'm not going to go into any specific part here, but the first place for a lot of people, and this is actually something all businesses should do, not just people starting up businesses, but every year, existing businesses should sit down and re-examine what their business plan is. And this is one of the problems with existing businesses. They get complacent, and then times like now hit them and they're not prepared, and they take a long time to change and move. So no matter what your business is, and I'm sure you've all seen Dragon's Den in some format or other, this is really what a good dragon is looking for. Have you looked at just beyond the ideas and what your goals are? What is the strategy? What are the products that are needed in the market? Have you done your analysis of what that is? Have you got your finances in order? This is obviously a very key area, but it's not the only area. For me, it's also looking at who's your team. What actually defines success. So when we go into companies and do a business health check, one of the things we do is we mark the business out of 10 across several areas. And then we come in several months later, after work has been done, to test that business and to see what areas have improved. So it's really important that you have something to measure yourself against. If you're not measuring it, then you're not really a proper business. So the key things in the business plan, it's great having the ideas, you need to have a vision and a goal. And again, this is all stuff that you need to write down. It's very challenging when you get out there initially to work out what it is you want to do, but most people have a pretty good idea what's the product or service, but they may not necessarily know who the client is. So this is where all the research piece comes through. I've already spoken about funding, getting the right partners, whether you have a partner who brings equity on board or whether they bring a skill set on board. And again, how does that then reflect in terms of an ownership piece in your company, or how does that affect the structure of your company? There are other ways of getting partners on board as well. So typically it's a mixture of fees and or percentage equity, or you're just actually paying them for a service. The guy spoke about accounting and tax. So what are the things that we do with clients when they come to chat to us at Gulf Tax Accounting Group? So we'll always help them put the financials part together of their business plan. We'll help them understand what their key performance indicators are. And every company should have their milestones. That's how you ultimately understand if you're being successful or not. Obviously, Peter spoke about VAT and the penalties around it. For any business which is going to become an e-commerce business, then VAT is a really crucial thing to understand, not just VAT, but corporation tax as well. So we're really fortunate in the UAE that we have a 5% basic VAT rate. In most other countries, that's quite a bit higher. So if you're an e-commerce business, you really need to understand how that implicates and impacts your customers if they're ordering from different parts of the world. How do you report in those ultimate areas as well? So if you're selling a lot into Saudi or other areas, how does that impact? How do you account for that? So if you do not have an accounting system, and Pete talked about not having a CRM system, but I can tell you 100%, if you do not have an accounting system managing this piece and managing your cash flow for you, you're going to be in serious difficulty. It's also about having the right person. So having a tool is great, but having a person who understands how the tool works is equally, if not more important. Unfortunately, in our experience, we've seen a lot of people who have software, but they have bad accountants who don't understand the wider picture, who may only understand a small piece around it. Once you've got those kind of aspects of your business plan together, then going forward to get the right licensing. So avoid getting the license in the wrong place. But what a lot of people don't realize is this is not just about people based in the UAE setting up businesses. If you're a business owner based in France and you have the opportunity to set up an e-commerce business model by setting up your licensing in the UAE, you have an opportunity to have huge tax savings, and ultimately depending on where your clients are based, by basing your business in the UAE. So again, corporation tax typically across the world is about 30%. In the UAE at the moment it's 0. So that's a huge opportunity for those types of businesses to come to the UAE and start doing e-commerce business. Obviously, the big difference when it comes to a business versus an e-commerce business really starts to hit when it comes to the marketing and sales piece. Having a website is not good enough to be called an e-commerce business. You actually have to have an electronic shop front. So this is actually an area where most clients that we come across struggle. How do they set it up properly? So we're very lucky that we work with a company called Creative 971, who basically are Shopify experts in the region, and they can help traditional businesses convert over to becoming e-commerce businesses, and they can help entrepreneurs set up their e-shop fronts as well. On the licensing side, we set up a collaborative arrangement about 2 weeks ago called eborderless.com. And the challenge for a lot of business is, where do you go to get good advice from a number of key partners? So that's exactly what eborderless.com is. It is a collaboration of an accountancy firm, which is ourselves, with a shopfront, e-shopfront, e-commerce platform, which is Creative 971. Trade License Zone do the licensing. We've got a number of other partners there who do logistics, etc., and branding. So this is really important as part of the e-commerce portal to get your logistics piece correct. The challenge for a lot of people, though, is this new business model is very, very much based on technology. So it's really important, and Pete mentioned this earlier on, protecting your data and the access to your systems is really crucial. Again, a lot of people out there may understand how to set up a printer or a laptop, but the understanding out there of cybersecurity is quite weak. So again, Pete will be one of the guys to have a chat with in that space. Pete mentioned about CRM systems. Also really, really important is to have your system online. So your proposals and your contracts should all be online, and this really allows you to move quite quickly. So when is the right time? And I suppose for me, the right time, I look at what's happening at the moment. There's never been a better time to go online and become an e-commerce business. The projections for next year are $4.5 trillion for e-commerce sales, and it's growing exponentially every single year. Online shopping at the moment accounts for about 10% of retail sales. So there's a huge opportunity for that to grow upwards. And from some of the research I've looked at, it reckons about 15% year-on-year growth. I think because of the whole COVID-19 thing issue, that will actually accelerate quite a bit more. So when is the right time? Now is the right time. There's never been a better time to set up an e-commerce business or to convert your business to being e-commerce. A couple of clients I met last month had a number of flower shops across the region. Those physical flower shops are now pretty much storage space, and all their business has been done through their web portal, which was actually an add-on idea about a year ago, and now all their business has been done through it. So you can see from the graphs here, the growth of e-commerce, which is the red line, is going through the roof. Traditional department stores will always be around because people want to see and feel and touch the product, whether it's beauty, whether it's clothes. Obviously, even though in the food industry where people go to eat out a lot, that is also taking off in terms of people eating at home and getting deliveries. So you can't ignore it in any sector, and services are no different. So again, I come back to this piece about choosing the right partner and the right business partner. Trying to do something like this, you may not necessarily always have the in-house expertise to do all the things that you need to do, and to get a fresh pair of eyes is quite important. So having a business partner you can work with and trust is really critical. As an entrepreneur, I know myself, when I tried to set up my own business initially, I thought I could do everything on my own, and I learned very quickly I couldn't. So that's why I brought a partner on board. And that was really incredibly important, because that allowed me to develop the business while he focused on doing the back office side of things. So again, how you bring the right person on board and who that person is incredibly important. If you do bring a business partner on board, and if it is a friend or not, make sure you have a shareholders agreement in place. So it's really important to get the proper legal advice from a legal partner. Okay, going back to the marketing piece, for me, I think, this is obviously the crux of what you're trying to go after. So who are the clients and the customers that would buy your product and service, and why would they buy it from you? So you need to do a lot of work in this space before you get your business up and running. You need to segment your market. So, a product that you may have may not appeal to everybody. So you really need to identify who is that target client market. Is it male? Is it female? Is it families? What's the nature of the business? And then geographically, what are the geographic locations you're trying to go after? And based on that, your marketing should really then kick into, for those particular segments that you've identified, pitching to those. So you really need to do the research. One thing I find a lot of pricing issues as well for companies, they don't modify their pricing for various markets. So in particular, when I see Western companies coming to the Middle East, they have a Western pricing model, which doesn't work particularly well here. So it's really important to be flexible with Okay, so I mentioned about eborderless.com. So in terms of what we do in that particular collaboration, we help with the businesses getting their setup advice. So when I meet with a client, normally they're looking at, getting some feeling as to how they put it all together, because it's quite a lot of work and it's quite challenging. We obviously help that conversation in terms of their strategy, setting up their business plans, working with them. What I call the day-to-day grind, which is the accounting tax, super important. And as Peter said, if you don't get that right, your penalties are going to close your business really quickly. From the data and security side of it, having a good CRM, e-proposals and security, that all stuff happens through Gulf Tax Accounting Group. And then we will link our clients up to the e-commerce platform specialists, which are Creative 971, the company formation and licensing, which is really important to get right, which is TLZ. And then we have a panel of lawyers who we can recommend people to have a chat with when they're putting their legal bits together, and also the warehousing and fulfillment. So if you're interested, and if you're in the kind of early stages of it, or if you've kind of gone down the route a little bit, then I suggest you drop me an email if you need any advice. And thank you very much for your time. So with that, I am now just going to check with Joyce if we have any questions for Q&A.
Yes, we do, Bill. There's one question from Jacqueline Ferguson. Do you want to read it out, or do you want me to do it?
Sure, I can. Yeah, if you want to read it out, Joyce, please do.
Yeah, sure. I think this question is for Peter. Jacqueline is asking about incorrect invoicing. She asks, can you please explain the incorrect invoicing in a bit more detail? Incorrect typographical errors, disputes by customers that result in invoices being reissued, or something else?
Okay, thank you very much, and Jacqueline, thanks for the question. I think when we're dealing with VAT, with legislation, we're talking about incorrect invoicing in relation to what the legislation requires. Normal clerical errors, wrong pricing, that doesn't really have any impact on an incorrect invoice for VAT purposes. The VAT legislation has certain requirements for invoicing, particularly if someone is registered for VAT. The use of the words tax invoice, for instance, a unique number, date, name and address, and VAT registration number of the person issuing the document. Similar information for the person receiving the document, particularly if they're registered for VAT. And then details of quantities, description, and value, as well as on a line-by-line basis, the VAT rate and the VAT amount that has been charged. So if your invoices tick those boxes, then there's not really a problem with an incorrect invoice. The only other issue that tends to come to the fore
is that from the date at which someone makes a supply for VAT purposes, they have effectively 14 days to issue a valid tax invoice relating to that supply. In most cases, this is not really an issue because people usually simultaneously issue the invoice and make the supply. But where there is a timing difference, if you issue it outside of that 14-day period, then you also run the risk of having one of these penalties that can arise. But usually it's for the penalty gets raised for people raising a non-VAT compliant invoice.
Okay, I think we've ran out of time. So if any one of you still has a question related to today's topic, please get in touch with Bill. His contacts are still on your screen. You can maybe take a screenshot of it. At this juncture, I'm gonna give each and every one of you, the speakers, time to say your closing remarks, and then we will close the session. Thank you.
I suppose I will start. I was speaking about cash earlier on. Let me tell you about one other thing you should be thinking about, and that is standard operating procedures. You should have somewhere a document which mirrors what it is you and your entity does, because God forbid anything ever happens to anybody. Best of luck out there.
All right, well, I suppose it's my turn next, and I'm going to go and steal some of Bill's limelight. We spoke about pricing on VAT and price list being VAT inclusive, and particularly in the e-commerce side of things, you may be providing pricing for clients who are in the UAE and those who are outside of the UAE. And obviously from that perspective, if you are exporting and things are subject to VAT at 0%, the prices will look slightly different. So there is a way around that with your pricing, and I would typically advocate showing pricing as being at an exclusive amount, the VAT that has been charged, the VAT rate that has been charged, and the closing amount inclusive of VAT. And if you are doing exports, you can indicate that the pricing is subject to VAT at 0%, and that the price then quoted will be equivalent to your local supply at the VAT exclusive pricing. So that, but the wording gets a little tricky around that, but essentially you would be able to accommodate both zero rated and standard rated supplies.
Thank you, Peter. Bill, I think there's a question regarding e-commerce payment. If you want to address that, it's regarding payment for exports. Is the payment only in the UAE or other places?
Yeah, the payment platform is actually built into the online store. So there are a number of payment platform options. And again, depending on where, if, for example, if it's a business out of the region who is setting up a company structure over here, they will go through that process with the people at Creative 971 to determine which is the most suitable payment platform for them. I think the challenge here at the moment, and there are definitely a few banks working on it, I spoke with a couple of them in the last few weeks, is for companies, for new entrepreneurs setting up businesses. That part is relatively easy. The challenge is still with the banks being flexible, depending on the ownership model that companies have. So if you have one person, a sole trader in a company, provided your background and credit history is okay, you shouldn't have any major difficulties. But if you have a number of investors, then some banks are actually very difficult to get through that process with. So again, having that collaboration piece is important. I guess just my final wrap up in terms of my side of it, I know Peter's left to speak, is look, I suppose I'm really talking to the audience of people who are thinking about setting up their own e-commerce business. In particular, if you've lost your job or you're about to lose your job, it's tough out there doing it on your own. So what I would suggest is you obviously through the Dubai Business Women's Council have a great facility to get really good advice and best practice from all the ladies there. But you also have people like Gulf Tax Accounting Group, where we also have wider networks of people. So, if you're thinking about it, my suggestion is as much as possible, try and put together your own business plan initially. And, you have my contact details to email me. And if I can help, I certainly will. But if you just ring me up with the vague idea of having some kind of a business, I'm gonna save you some time. Don't waste your time and don't waste my time. You've got to show commitment, and the first step on that one is really putting your business plan together. Pete?
Thanks, Bill. Yeah, I just want to reiterate on the security part. I mentioned earlier that security is really about stopping people walking away with your data, and it's keeping in line with any data regulations that are here, which all sounds very boring, but I want to remind people that using the proper systems, like these kind of cloud-based systems, which are heavily protected, instead of storing things yourself, means that you're protected from things like ransomware. The latest one being Garmin, the manufacturer of sat-nav and fitness devices, have a $10 million ransom from Russian hackers. Nobody can access their services. It's just another reminder that nobody is safe out there, and you need to do as much as possible, and you can do it cheaply, but you need to do as much as possible to secure your data and protect your business going forwards. Thanks very much for joining. Thanks a lot.
Thank you very much. Thank you to all of you who joined us today, and a big thank you to the speakers as well. Have a wonderful day. Thank you.